Hello, agents. Hello, everyone. So welcome to May 2024. 10 years holding its own there at about 4.6. So anything over 4.25, we're pretty happy with. SPIA rates did increase this month over last month. So let's just jump into it and see what it costs to fund $40,000 annually for certain ages for life with a full premium guarantee, meaning if they die early, they can never lose any money, right? So let's go ahead and jump right into this. This is an immediate annuity for May 2nd, 2024. These quotes are valid today, and they change at any time, of course. But this is male and female, and the cost to fund $40,000 annually via a monthly payment. So it'd be $3,333.34 a month life with refund of premium. So let's take a look here. Here are the male numbers. So for a male age 55 today, to get $40,000 annually, he would have to make a deposit of $607,896.99. And as you see, if you go down the line there, you can see the other ages, 60, 65, 70s at $474 and $423 for the 75-year-old. On the females, a little more expensive because females are supposed to live longer. Actuarially, they live longer, so it's a little more payout supposed to come out, so it's a little more premium to fund the same income. In this case, the 55-year-old female is $618,712. So what's that? About 11 grand more than the male. So what's that? 4 months longer she has to live, right? So anyway, the 60-year-old is 585, 65 is 544, and so on. You see the numbers there. You can pause the screen and take a look at it. These incomes begin 1 month after the premium is received at the insurance company, right? There's no other fees. There's no fees on these. We don't do that, right? The commission's all built in. These payments are net after all commission, internal costs, everything, right? These quotes are based on non-premium tax states, meaning the state that doesn't take some of your money before it goes into the income, which will result in a lower income. So those states include like California, Colorado, Maine, Nevada, other states. None of these are approved in the state. None are available through us through New York or Puerto Rico. We don't do business in those two areas. So these would be not applicable. Anyway, 5-1 rates. These were run A+ rated company. This is a totally non-liquid, non-lapsable product. Others out there do have some liquidity features. They're very expensive, but you have the access. This one only gives you the access of the 7 or whatever % you're taking out of your own money. 94 Comdex. Premiums may be higher in those states. So basic stuff that we've done before. This is just a definition of the installment refund. In case you have any questions, pause the screen here. It also takes about the returns that we're about to get into and, the payments to age 95. So this will make more sense on the next screen. Oh yeah, to solve the refund. So if you want to know how long is the refund going to last, you take the refund period and use the premium divided by the income. So in this case, on the 65-year-old, it was 527 premium and divided by the income of 333. It was 158.27 months, 13.19 years. As you see right here, 13.19 years. That's basically how long it's going to last. So that's the minimum. So if the person dies earlier, it'll pay that to the beneficiaries to that term. And if the person should live longer, it'll keep paying for as long as they live. That's the idea of a lifetime annuity, right? So here's just showing my work. I like to show my work. Of course, if this is non-qualified money and all of it's non-tax, you're going to have an exclusion ratio, meaning that a portion of that payment is going to be excluded from tax. And as you see the non-taxable portion here and the taxable portion, this is great up until life expectancy. This is great for people that are maybe in a higher income tax bracket, want to take money, but don't want to have the 100% of that money taxable. So here's a way you get a tax exclusion ratio. So, and this down here, the last certain payment, meaning because it's not exactly going to equal 527, 582 if you take 333. So the last payment will be shorter to make exactly that if you're not alive at the time of that last payment. I hope that makes sense. Makes sense. That's the total return at age 95. That's your minimum return is your refund. And there we go. That's the amount. There's your payout percentage that was mentioned on the other screen. This is principal and interest. So in any other investment, this is what you would need to take out to equal the same payment and never run out of money. So where else can you take 7.6% at age 65 and pretty much guarantee if you live to 104, you're not going to run out of money? That's the key with the immediate annuity. It's a longevity product. It's not for people who aren't going to live a long time. Not a good deal. Live a long time, great deal. Can't be matched, peace of mind type stuff. So it's a longevity product. Let's not look at it as anything else. Let's take a look at history. Today's rates versus recent highs. So in January, we were at an 8.3 payout rate. But in November of 2020, 23, we were at a payout rate of 8.8%. So as you can see that, I got to click on the right screen, 8.3 versus 8.8. So where are we today? And that's the annual payout percentage. That's what it means. So where are we today? So today on May 2nd, we are at 8.4%. So not quite back to where we were in November, even though treasuries are pretty much matching and corporates are pretty much matching. So I'm not thrilled about that. I think we should be higher. I think the insurance companies are keeping a little extra juice for themselves. Historically speaking, doing this 26 years, knowing how the rates normally come out, they're not aggressive. Companies are fat and happy right now. They're not looking for premium, so they're not being aggressive on these rates. In the future, towards the end of the year, if they haven't hit their premiums or if things slow down, you may see more aggressive specials come the end of the year. But as of right now, the traditionally very good carriers are being pretty conservative out there. If you want to know just what $100,000 would produce, here's just a basic breakdown on a single life and 10 life with refund and 100% joint life. So that'd be two 65-year-olds like that. That's how that one works out. So if you just want to know basics, like kind of do your own math on about where you would be on one of these historically. Here's some disclosures. You want to pause the screen there. Anyway, yeah, that's the end of my presentation on immediate annuities and the current cost to fund $40,000 a year guaranteed with a very, very strong insurance company, right? These are lifetime products. If you're writing a 3-year MIGA, you might not be worried about the super longevity of a company, but when you're 65, 55 and you're writing this could be 40, 50-year product. You want to just take that extra precaution, go with the higher convex, go with the higher financial ratings that have been around for a long time, companies that specialize in the product that you're looking for and are well-rounded, meaning if something should happen to that company, other companies are going to be like salivating to get in onto that business. So, you know, Penn Mutuals, Minnesota Lives, all these huge companies, New York Lives, these are great companies that have histories of being good in these areas. So yeah, take a look at all that. Anyway, for the most up-to-date information, follow me on LinkedIn and YouTube. Call me here, right here. If you have questions, want quotes, want to get appointed, want to sell annuities, never done it, have a life license, that's what we do. We get you guys started. You don't have to be the expert. You fall back on us. That's what we're here for. We'll walk you through, get your clients exactly what they're looking for is as close as we can to the most suitable, greatest product they can use without being biased regarding commissions or companies we're independent. I don't work for any bonuses, trips, or anything like that. Whoever's the best, whatever it is we do, worry about the last question should be is what's the commission. So anyway, thanks for watching. We'll talk to you all soon and take care. Bye-bye.